we're not getting anywhere towards self-sufficient. Break this down for us.
Okay, Michael, well, look, firstly, thank you very much for having me on the show today.
Right.
I think you have to break it down country by country. So, if you look at Rwanda, where we are now, it's going to be very difficult to get to self-sufficiency because of land constraints.
Right.
So Rwanda is always going to be an importing nation, very similar with Burundi. But where the bigger problems lie are with Uganda and Kenya. Uganda is at a point where it is self-sufficient.
Right.
It is an exporting country, but sometimes it finds itself unable to export to its neighboring countries because of trade barriers. Now, thankfully, Kenya and Uganda are actually having a very good relationship on sugar at the moment, and so we've seen a lot of Ugandan sugar flowing down into Kenya, which is, shows a softening of the relationships, and it shows that the two countries are working actually very well together. But Kenya overall tends to have a rather large sugar deficit. This year we think it'll be around 500,000 tons.
Now, you're talking about 500,000 tons and, of course, a deficit in Kenya. But just if I may bring back some of the research that I read, that, of course, also you touched base with. Well, look, last year we saw about $1,500 for a ton.
Correct.
Of sugar, and that's 4 times that on a global market. What is East Africa doing about that?
Well, that was just Kenya. It was Kenya specific. Kenya is quite a closed market for sugar in a way that it only allows imports from COMESA. Now, the rains of 2017 were not very good. The COMESA crops everywhere were late. They were smaller than needed. The Kenyan crop was also very, very poor. And so it led to a bit of a scramble up towards the elections for sugar imports. And we saw around 1 million tons of sugar come in over a 4-month period. So it's been a very tight situation. And in that run up to that 1 million tons of imports, we saw prices climb and climb and climb from $800 all the way to $1,500, which was probably the highest price anywhere in the world at the time.
But this is a good point for you to sell.
Absolutely. If one had cargo, it was a fantastic time to sell, but nobody really had any sugar. And then obviously a huge over-import occurred, 1 million tons came in, and prices crashed around $650.
Do you see the trend going down at least for now?
At the moment, we're actually seeing a bit of an uptick again. It's been, a lot of traders have been licking their wounds for the last 18 months, and finally we've begun to see a little bit of an uptrend. And that's important for the industry because it gives confidence to the traders, it gives confidence to the producers that there is a future in the business.
Right.
And if we are to address, going back to your original question, if we are going to address self-sufficiency, investors who are going to need to come, because that's how we're going to solve the self-sufficiency problem, they need to have confidence. They need to know where the future's going and that their investment is going to be secure. But
is the future in sugar? Because I mean, we're speaking to investors now. Is the future in sugar?
I mean, look, sugar is a very important crop in this part of the world. It generates an enormous amount of jobs. It's also a very large part of the staple diet because it is a calorific energy giver, and it's also very cheap. So it's a very good way for the lower parts of society to get energy and calories into their diet.
Right. We so many times talk about regional integration, and just as I mentioned on the top of the show, Transform Africa Summit is happening, and much of the conversation is about the digital economy and regional integration. But today, when you look at some of the tariffs towards Kenya and, of course, Uganda and Tanzania in terms of sugar importing and exportation, it is quite crazy, And currently, you're looking at this posing a big threat to EAC's integration. Tell me, what needs to be done to solve this?
I mean, I think you've hit on a very good point there in the EAC integration. You have Kenya and Uganda having a pretty good time of it on sugar. Rwanda as well, very well integrated, quite well aligned. But if you look at Tanzania, whilst being part of the EAC, very much has its own sugar policy. Now it has its own industry. It has 4 mills, but it also has a very steady deficit of around 120,000 tons a year.
Right.
But that deficit is being plugged with sugar from Guatemala, from Brazil, from Thailand. Whereas just down the road in Mozambique, which is a SADC country, Tanzania also being a SADC country, you've got a large surplus. It would be nice to see, African countries solving African sugar deficits. African sugars supplying African markets. There shouldn't be a need to look towards the world market, such as Tanzania or Guatemala.
I mean, is Tanzania self-sufficient itself? Because just about maybe last year, if not this year, we saw a deficit of about 135,000 tons.
Correct. It is not self-sufficient. It will be within the next 2 to 3 years because you have Kilimanjaro, which is the largest mill there. That is doubling in size. So that will be 125,000 tons extra. That will plug that gap. But you see, population growth is so extraordinary in this part of the world that investment has to keep up with the pace of growth.
Okay. Nick, I mean, before I let you go, what are some of the trends that we should be looking at? And where is the most demand for sugar in East Africa? I mean, putting in the likes of Ethiopia and South Sudan. Where are we looking at that? Okay,
so right now, if you include Ethiopia, Kenya, Tanzania, Rwanda, Burundi, South Sudan, Eastern Congo, the population is around 285 million people.
Right.
In the next 80 years, that's going to go to 1.4 billion. So that's a huge amount of sugar, other commodities that have to be produced. Now, what we're seeing is that there are two very, very large demand markets. One is Kenya, because Kenyans eat roughly double the amount of sugar that anybody else does in the AAC.
Right.
The other is Ethiopia. It's 109 million people. It has a lot of installed capacity, but the sugar industry is not running as it should. They're looking to privatize mills, and I think that's a very exciting...
And I think that is something that they're working on currently, because you're looking at their market is really crippled. And, but there hasn't been so much, emphasis on how they're going to invest and where they're investing, but they just say more mills and privatization.
Correct. I mean, I think for Ethiopia to really work, they have to privatize.
Right.
And I think they're going towards that now, because the installed capacity in Ethiopia at the moment is about 1.8 million tons, but they're only producing 650,000. So if they're privatized, run to the maximum, and that the cane areas are grown properly, I think you could see Ethiopia become a major, major producer and a supplier of the region, which would sort out a lot of problems.
Rwanda, currently you're looking at about maybe $45 to $50 million in, spent on importing sugar into the country. How do they go over and above to bridge this gap?
Rwanda is going to be difficult because the land usage is at such a point now where sugar needs a large amount of land, and there physically isn't that land available. You might be able to get the local mill Kabuye up to 25 to 30,000 tons, but Rwanda is a 100,000 ton consumption market, so you're never going to be able to bridge that 70,000 ton gap, and it's only going to get bigger.